Hello everybody, this is your boy is back here and welcome to another session together, guys. In this video we are going to talk about the voice of the time frames. All right, did you guys ever knew that all the time frames has a voice? Well, then guess what? Today I'm going to explain that to you. All right, and if you're a normal trader, if you're a beginner trader, advanced trader, you can understand what is going on behind all the time frames. And especially if you are an algorithmic trader or a robotic trader, someone who uses robot to trade, how does this then affect you? All right, so if you're excited about today's video, what I will tell you is stick behind to the end of the video, because every juncture in this video is very, very important and you don't want to miss it. All right, so having said that, let's swing right into it. Okay, so guys, before I take you to my desktop, all right, I want you to think of this saying. All right, most of you are very, very acquainted with this saying, which says a little drop of water makes a mighty ocean. Right, you know about that? Let me know in the comment section if you know about this saying. Okay, now behind this saying, it's a lot of things encapsulated inside that can help us to relate with the time frame discourse that we are having here. All right, guys, what I am about in this discourse, or what I want you to understand from the saying, which can help us to relate with the time frame, is this. Guys, every small drop of water, okay, is what constitutes to bring out the bigger picture. Okay, and in the smaller picture, okay, during this drop, it is very hard for us to see the bigger picture. Can you confirm that for me? All right, okay. But if we are looking at the ocean, it is very, very hard for us to understand that the ocean was formed by a little drops of water. Okay, if someone told you that, hey, listen, this ocean here was formed by a little drops of water, or a time ago this wasn't that big, it was some small portion of water area and then it just became big, maybe you will probably find it hard to believe that, right? Okay, so having put that in place, what do I want you to understand? What I want you to understand is this. See, if we are looking at a bigger picture, it is very hard for us to see the smaller picture, what is going on in the smaller picture. And if we are looking at the smaller picture, it is very, very hard for us to see what the bigger picture is saying. Interesting thing is this. The smaller picture is saying that, hey, listen, we are the one who make the bigger picture. Who makes the bigger picture? All right, the smaller picture is saying that, hey, listen, we are the ones who make the bigger picture. And the bigger picture is saying to you that, listen, this is what the smaller has done so far. All right, when you look at the ocean, you don't see the little details, you see what has happened so far. You see the bigger picture. Are you with me? Now, so I believe you are getting the direction of where I'm going with my discourse, right? So the same thing is what we have to see in the forex trade, or in whatever type of trading you do. All right, in whatever type of trading you do. Now, each time frame is saying something. Now we divide them into two, or we can section them into two, and the segments of these two is the lower time frames and the higher time frames. All right, the lower time frames more or less are saying the same thing, and the higher time frames too more or less are saying the same thing. All right, so how does this information help us? Okay, now I'm gonna lead you through how this information helps you, and if you're a manual trader, you can understand which one is exactly good for you, that you can set yourself up for that, Or if you're a robotic trader, how does this implies to you and how to go about it with your robot? All right, you ready? Let's keep on moving. So guys, I will take you to my charts and I will show you a little bit of things. But one thing that I want to say before I take you to the charts is this, all right? Now, you guys need to understand from all the dialogue that I've given to you to this point, you guys have to understand that it is the smaller picture, the smaller time frames that creates whatever thing we see in the bigger time frames. Okay, so where does everything initiates? Everything initiates from the 1 minute time frame. Everything is generated from the 1 minute time frame. All right, and the bigger picture, it is the 1 minute. All right, whatever thing that comes out of the 1 minute. So it is the outpouring of the 1 minute that all of them clustered together, all of them put together, it forms the bigger picture. Okay, so guys, let's go right on my desktop and I will show you some 1 or 2 things that will enlighten your understanding regarding this issue. All right, so let's jump right into it. Okay, so guys, here we are on my desktop and I want to show you something. All right, now when you look at the 1 minute time frame, okay, this is what you see. All right, now I've put in the period inside, all right, separate period inside, so that we will know the periods that we are looking at. All right, so that it will segment each day, each week for us. Okay, so we are currently looking at the 1 minute time frame, and guys, if you look at the 1 minute time frame, it can appear to you to be like as if you are looking at the 1 hour or whatever other time frame. All right, they look almost the same. And I want to say this now, guys, believe it or not, whatever pattern or whatever type of structure that is shown in the smaller time frame, it is also shown in the higher time frames. Okay, the tipping point is just between that. The smaller time frame constitutes the bigger time frame. They create the bigger time frame, and the bigger time frame doesn't create the smaller time frame. But what the bigger time frame does is the bigger time frame shows you what the smaller time frame has done so far. All right. So I was saying that whatever type of thing or behavior structure that you will see manifested in the smaller time frame, the behavior is more or less similar to what it is shown in the higher time frame. All right, and the reaction more or less is equal. All right, that is why I want you guys to stick to the end of the video, because I will show you the pros and the cons in trading in each time frame. All right, okay, so you see, as I was saying, just to give you a small example, you know, I'm a type that I love trading patterns. All right, now see, we have a head and a double top. All right, now check what double top happens. What does the market tells you? That there's going to be a reversal. All right, then boom, market breaks out. Check what happens. Every time there is a breakout, there is a likelihood of a retest. Then the market came back, retested the neckline. You see, retested the previous supports. All right, and now it's a resistance for this. And what happened? Boom, a drop. All right, now we are looking at a drop. All right, look, so if you want to trend, if you're a trend trader, you see what is happening in the market. All right, but this is beside the point. Let's go through. Yeah, let's go back to our main subject. All right, so all right, if you look at a 1 minute time frame, this is what you see. All right, and you are very, very limited in scope. Now look, you see the 1 minute time frame. Okay, now it's almost 4 p.m. all right, it's afternoon time. Okay, and imagine what the period separator that we have here. All right, this period separator that you see a lot of them here. You see how many periods separator you can see here. Okay, so each one of these separators represents a day. All right, I'm looking at the 1 hour time frame. All right, but guess what? When we come to the 1 minute time frame, we are about to lose this period. All right, so this is showing you how much information the 1 minute time frame gives to you. Now, if we look at the monthly too, you will see the same thing happening. You see the same thing happening in the in the monthly time frame. So you see, I talked to you guys about a double top patterns. You see what we saw in the 1 minute, we see something similar here. All right, what happened? Boom, breakout. What is happening? A retest. Are you guys getting the picture? Are you guys getting the picture? You see, so neckline broken. All right, let me just do it anyway. Let me do it a little bit rough. All right, neckline broken. All right, then market came back, retested. Okay, all right. As to if the market is going to respect it or not, it depends on different factors. All right, which some are obscure to us, others too, through some technical analysis and fundamental analysis we are able to dig into. All right, but anyway, coming back to us. All right, so guys, you can see the monthly, right? Everything looks like the one minute time frame. All right, but check this out. In the 1 minute time frame, we are very, very limited. All right, so all that you are seeing here is forming the monthly details. Okay, it is, I mean, let me back up and say it this way. Whatever thing that you are seeing here, okay, this is how you know that this forms the bigger pictures. Okay, so let me show you. All right, let's just draw this line here. All right, for illustration purposes. Okay, now look at how this line gets tiny. All right, or as a matter of fact, let me take this trend. Okay, let's assume this trend. Let's assume to have this as an uptrend. All right, okay, so the market is going up here. All right, or was going up. All right, now let's come to 5 minutes. Now in the 5 minutes, do you see it? Okay, do you see what happened? What we saw in the in the smaller time frame, 1 minute, now in the 5 minutes, you are getting an extra layer of information. All right, the 5 minutes is telling you that, hey, listen, in the 1 minute, you were a little bit limited. All right, it was trending, but you didn't see what happened previously. You didn't see what the 1 minute did previously. But check what, I'm the 5 minutes and I'm giving you more insights as to what the 1 minute did previously. All right, and the 5 minutes is telling you that before you saw what you saw, okay, the 1 minute did all of this stuff. And it did all of this stuff, obviously. All right. Then you say, oh, that's cool. That's cool. All right. So then I want to keep moving. All right. So you say, okay, I want to keep moving. Then you come to, okay, let's keep our lines there. You see, now, the more we move on, the more our line we draw, or let me say it in this way. The more we move higher in time, okay, the smaller the information we are currently seeing, or the information that we see in the smaller time frame gets smaller. Sounds quite logical, right? Good. All right, guys, if anything is not clear, let me know in the comment section. All right, now check this. Okay, so now we are in the 15 minutes time frame. Now the 15 minutes time frame is saying what the 5 minutes previously said to the 1 minute. Now the 15 minutes is saying, listen, I have more informations than the 5 minutes and the 1 minute told you. All right. I have more informations about what the 5 minutes and the 1 minute did before they got here. All right. Now, you will have to, with this same saying, all right, you will have to reciprocate it. All right. You will have to repeat this same logic for all the time frames as you advance. So the 30 minutes too is saying here that, hey, listen, I have more informations, all right? I have more informations as to what the 1 minute did. The 1 minute has lost a lot of its own information, but I can show it to you. I can even show you informations that the 5 minutes couldn't show you. I can even show you informations that the 15 minutes couldn't show you. All right, but there is limitations to the 30 minutes as well. The 30 minutes can show you all the time frames. All right, now bear in mind, here is a date. Same thing here. All right, that's why we place this period separator. All right, now let's keep advancing. We come to the 1 hour time frame, and the 1 hour says that, hey, listen, I am just the behavior, all right? I am the hybrid between the lowest and the highest, all right? Like, I have informations that all the time frames below me don't have. That is what the 1 hour is saying, all right? But guess what? Who made up the 1 hour? I want to hear your answer in the comment section. Who made the 1 hour? What generated the 1 hour candles that we are seeing? What generated all this information that we are seeing in the 1 hour? It is the 1 minute. We saw it. Come on. I don't want you to lose the picture. All right? I don't want you to lose the picture. Do you see this line? All right? Do you see this information here? All right? 1 minute. Guess what? This is all we see in the 1 minute, okay? This is all we see in the 1 minute, all right? Because of the restriction on the display of our monitor and of the platform, all right? Now, this is the only information that we are seeing, all right? The little information is not all that good for us, okay? So, we move on to, we say we want to get more details. So we move to the 5 minutes, all right? And guys, check what? Here is the 5 minutes. Do you see this line? Okay, do you see this whole information right here? Okay, so this was the 1 minute information. And see how many days information the 5 minutes time frame is giving to us. The 5 minutes time frame is giving to us 1, 2, 3 days of information. Sorry, as a matter of fact, 4 days of information. The current day, the previous 3 days of information. Okay, now this is good, but if we want to do a robust amount of analysis, technical analysis, this is nowhere near good. All right, especially now let me throw this in. This whole thing, the idea of is nowhere near good, it is a little bit subjective. It will depend on the type of strategy you are trading, all right? Because for a scalper and for a high frequency trader, there's a whole lot of good information. Are you getting me? All right. But for a swing trader and for maybe an intraday trader, all right, for a swing trader and for an intraday trader, it's nowhere near good. All right, it's almost good, but nowhere near good. All right. Okay. So I hope you are getting the picture right now. Okay. So 30 minutes showing us a lot of previous days data. Okay. 30 minutes. Ooh, see how many days of information we are seeing. Okay, so that is the language. That is what they are communicating to you. Then we come to the 1 hour. Then the 1 hour says, man, listen, I got a lot that the others can show you. All right, the 1 hour look, the 1 hour is taking us way back, like months back. Like with the 1 hour, we can backdate to like almost 2 months of information with a 1 hour. All right. Then we go to the 4 hour, then things change. All right. Now the 4 hour, this is no more a daily. All right. That is why I said that the 1 hour is where the umbilical cord cuts. All right. Because let me explain it. All right. I think this is important because all the information in this box, in each of this box, is a day. All right. When we go to 30 minutes in this box, we are still seeing a day. When we go to 15 minutes in this box, we are still seeing a day. When we go to, let me zoom. Okay, let me zoom out. Okay, so when we come to the 5 minutes time frame in this box, is still a day. All right. And when we come to 1 minute time frame in this box, is still a day. All right, it's still a day. But then when we come to 4 hour time frame, then bam, everything changed. This is no more. This is no more. The period you see here is no more a day, a daily period. All right, it's a weekly period. Okay, so each one of this is a week. Okay, each one of this is a week. All right, then we keep on moving. Then we go to daily, and daily is giving you this amount of information. Okay, then we go to weekly, and then we come to the monthly. All right, now you see how as we progress higher in the time frames, the more robust information we have access to. Where do we segment where do we divide them into as to which ones are the higher time frame and which ones are the lower time frames? All right, now the higher time frames, the lower time frame, let me start with the lower time frame. The lower time frame starts from the 1 minute time frame to the 1 hour time frame. Why? Because in each period we are seeing a day. All right, so it is what could happen in a day. All right, that's why we call them the lower time frames. All right, and in the lower time frames, one of the characteristics of the lower time frames, which we will go in the area when we talk about the pros and the cons, one of the characteristics of the lower time frame is that it has a lot of candles. Okay, the higher time frame too is from the H4 to the monthly, and from the H4 we begin to see very, very few candles. The candles drop drastically. All right, now in a day, how many candles? Now before I say this, let me come to the 1 minute time frame. All right, now check this. In whatever time frame, all right, guys, in whatever time frame that you find yourself to be, it is basically also telling you that whatever candle you will see creating in that time frame will last for that portion of frame or period in which you find yourself in. Okay, so if you find yourself in 1 minute time frame, then the candle that will be generated, if a candle starts creating itself, it will last for 1 minute, and after that 1 minute another candle will have to be creating, okay, or be created. Then it is the same thing for the 5 minutes. So if I'm looking at the 5 minutes window, then the 5 minutes telling me that whatever candle that is currently at work or creating in this time frame will last for 5 minutes. So after 5 minutes, okay, after 5 minutes, it will change. with respect to the market watch, which you see here. All right, with respect to the market watch, not to your time. Okay, because a lot of you have some clock that I don't know what your time is saying. Okay, so with respect to the market watch. Okay, so same thing for 15 minutes. 15 minutes is saying that, do you see this candle? This candle that we are watching, it will change after 15 minutes. All right, and let me tell you something interesting. The reaction of whatever reaction you are seeing in this time frame is caused by this, the 5 minutes, and whatever reaction you are seeing in this 5 minutes time frame, okay, is caused by the 1 minute. Now maybe let me put it in this way too, and it will help you understand more. Example, do you see that this candle is going down and it's black? You say that, why is the candle going down? Why is it creating a bearish candle? Why is it getting too long like that? Because if you go back to the previous time frame is bearish. All right, guess what? Here you see one candle, but when we come to, let me put a line on it like this. All right, but when we come to the 5 minutes, check what happened. You see my line. You see, it has given me two blacks because 5 minutes makes 115 minutes. So that is what I was explaining to you, that guys, the 1 hour time frame, whatever reaction you are seeing in the 1 hour time frame is dependent on the 30 minutes time frame. Whatever reaction you are currently seeing happening here, down, up, is because it is coming from the 15 minutes time frame. All right, whatsoever thing you guys see here in the 15 minutes time frame was caused by the 5 minutes time frame, and all of these reactions is generated by the 1 minute time frame. Guys, I don't know, I mean, like, at this point you must have understand everything. If it is not clear, please let me know in the comment section the part that is not clear. All right, and I'll be more than glad to help you guys. All right, but I believe you've gotten the point behind this whole thing. All right, so that is it. Now with that same saying, it is the same thing that applies to the H4. Whatever thing you are saying to in the H4 currently on this candle is made up of these. All right, the reactions that is happening in the previous lower time frames. All right, so these all of these informations that I'm giving to you helps you to putting all of them together, helps to explain to you whatsoever language each time frame is saying. I mean, I don't know if it's clear or not clear. Comprende? No comprende? Let me know in the comment section. All right. Okay, I'm trying to break it down as simple as I can. All right. So the same thing for the daily. So we are looking at the daily and we say, oh, what is happening here? All right. Now let me take this off. All right, to show you something. Let me take this off to show you something. Now, do you see that the daily has a wick here? And can you see that it's almost like it has been eaten up? You see, it goes up a little bit and it comes down. It looks like it has been eaten up. So now the wick means that it was once here. It was a full candle. All right, just like you see this one. All right, just like you see this one. This wick is telling you that previously it was a full candle. All right, but it was eaten up and it came here. How do we know what caused this? We need to backflip. We need to go back in the previous time frames. We need to go back to the previous time frames. All right, we need to go back to the previous time frames. You see, we need to go back to the previous time frames. Now let me do something for you to get a picture very clearly. All right, now let me put this here. All right, let me put this line here. All right, now watch this very well. All right, watch this very well. Now let's go back in time. 4 hours. All right, now you see how my line is beginning to distort. All right, look, in the daily it is a straight line, but then now I get to the 4 hour, then now it is a diagonal, it's tending to a diagonal line. All right, it is distorting. Now let's go to the 1 hour. Oops. Now are you getting the picture? So now we are seeing that, oh, now the market is dropping in the daily, because in the 1 hour the market, the sellers have gotten into the market, so they are pushing the market down. Oh, so that is why in the daily we see it here. Are you with me? Yeah. And let's get to the 30 minutes. Oops, you see all this information. Now let's get to 15 minutes. Oh, you see how big the market dropped. Now let's get to 5 minutes. And 5 minutes will be telling you that, hey, listen, listen, this all you see down here is because the market is going down. All right. Now, I want you to notice something. I want you to notice how from the daily we are just on one candle. All right. This line that I drew for you guys, this line that I have drawn here, I've drawn here. All right. I want you to notice how it is on, not even on the full candle. It's just on the piece of a candle. All right. A part of the candle. All right. And I want you to see how just one candle, all right, how just one candle translates itself as we digress into the lower time frame, how it translates itself into multiple candles. This is to let you know how much more details we get when we go in the lower time frames. Watch this. H4. Now it looks like 2 candles. H1. Oh, 4 candles. I mean, it kind of sounds logical, right? 4 candles in 1 hour, and we went to 4 hour and we are seeing 2 candles. All right. I wanted to say something there, but I think I missed it. All right, forget it. Anyway, look, you see how many candles we are having right here in the 30 minutes time frame. Now then we go to 15 minutes time frame. See how many candles we starting to have. Now let's go to the 5 minutes time frame. Oh my, look at how many candles we've seen throughout the day. All right, that's not all. Look, oh, then we get to the 1 hour and it says, oh, look at all of this. You see? Now, do you see that in the 1 minute it's going up? That is why in the daily we see this. That's why in the daily you see this. I want you to see quick. Look at how it's moving up. Come on, don't let me down, bro. Okay, you see how it is getting, it is filling up the white area. You see how it's filling up the white area. Why? Obviously here we can't see much information. All right, that's why when you're doing technical analysis, you want to take advantage of the whole time frames. All right, that's why this topic is very, very important. When you understand what each time frame is saying. Now, because of my ample understanding about time frames, if I'm in the daily and I see this reaction, I know what is happening because I've studied the 1 minute upwards and I've studied the monthly downwards. You see, so even if I'm watching one time frame, which is not recommended to trade, I understand what is happening in that time frame. All right, so check this out. Okay, so I already showed you this. Okay, so all right, so the market's behavior is caused by the 1 minute time frame. It's caused in the 1 minute time frame. All right, everything is made up in the 1 minute time frame. And we all know that the market's behavior is caused by humans' reactions. All right, human beings make up the market that we are highly involved in. All right, now guys, if it is clear and you like the video, you've liked it and watched it so far, guys, hit the like button and do your great favor. All right, okay, so now I want you to see this. All right, I want you to see something from the higher time frame, all right, that the lower time frame don't give us. Now, this portion that I'm about to explain to you will help you to understand why it is important that we need also the bigger picture. All right, so it's not just important for us to have the smaller picture, but it's also important for us to have an understanding of the bigger picture. Now, that is what makes the technical traders masterminds, all right, is that they understand the movement and the concept, everything behind the smaller time frame and the bigger time frame, the reactions, okay, and they put it all together and they come out with what? And they come out with whatever decision they have to make to trade. All right, so now check this out. All right, now we are looking at the ocean right now. Okay, we are looking at the ocean, guys. What do you see? What do you see? You can see that the market was downtrending, or clearly put, the market is downtrending. It's downtrending currently. It's going down. Previously, it was going up, right? Then at a certain point, it started to go down. Question: who made all of this mess? Blame it on the 1 minute time frame. All right, 1 minute created all of this thing. It will shock you, but yes, it did. I mean, I showed you how it is manipulating the bigger time frames, right? Good. All right, so the market was going up, then all of a sudden it dropped down. All right, now I'm just giving you a just into technical analysis. All right, then we saw that it broke the structure. All right, it broke the structure. Then now the market is playing down below. Are you seeing why it's important for us to know the information in the bigger time frame as well? Okay, so now we know that the market is more likely to go down. How do we know that? We know because the bigger time frame is telling us that, hey, listen, since 2008, all right, more or less, since 2008, the market has declined. You can find 2008 in one minute. If you have to backtrack, or if you have to backdate in 1 minute, if we have to release this and go back in time, bro, man, you will get sick. Before you get the information you need, you will get sick. All right, so that is why we come to the bigger time frame, and I will shock you more, because guess what? Let me show you this to prove to you how irrelevant the informations of the higher time frame is to the smaller time frame. Like, the smaller time frame doesn't care about all the information in the higher time frame. Where is it? Where do we see the trend line? Where do we see it? We don't see it anymore. You see? We don't see it. I'm looking at the 1 minute time frame right now, and I don't see the trend line anymore. But there is a BVO. There is a middle way, where if I get into that middle way, there is a likelihood that I can see what I deducted from the higher time frame and what I deducted from the lower time frame. All right, and excuse me, and that is where most of the time we talk about those areas downwards or upwards. I mean, from that particular area downwards is called the lower time frame, and from that particular area upward is called the higher time frame. All right, that is the 1 hour time frame. When I come to the 1 hour time frame, do you see it just showed up? All right, not to say that if I go low I cannot see it, but the tendency of me seeing it drops exponentially. Are you guys getting me? It drops drastically. All right, so guys, I hope so far the explanations that I've been able to give to you has helped you. All right, oh sorry. Okay, so the market is going down. Okay, it's going down. So if you want to jump into this market, I mean, this is a raw or a rough technical analysis thrown out there. All right, this is not something that you take and move it to the bank to cash out something. No, this is hear it and not really forget it, but just let it be lingering over there, some part of your brain. All right, so guys, listen to me. You can see that the market is going down, right? So it will be more appropriate for you to join in the queue. All right, where do we identify the lower time frame? The lower time frame is from the 1 minute downwards, sorry, the H1 downwards. All right, and the higher time frame is from the H4 upwards. All right, now 1 minute time frame, I think this is a small details that I missed. All right, 1 minute time frame, we need 5 candles. All right, we need 5 candles of these before we can get 1 candle here created. All right, and we need 3 candles of these in the 5 minutes time frame. We need 3 candles, 1, 2, 3, before we can see 1 15 minutes candle. All right, now I will keep on going, but I'm saying this for the purposes of, guys, how do I know? I'm giving you a gist into how to know which time frame your trading should be in. All right, I'm not going to go into details. I'll do another video that I will explain all the details. All right, if by the time you are watching this video, all right, if you are interested in knowing which time frame is good for which strategy, you can go and check on my page, and you should find the video on the time frame in which each strategy is mostly built on. All right, but if it is not on my channel, then guys, let me know, or stay tuned, subscribe to the channel, because it will come very, very soon. All right, now having said that, let's come back to what we were saying. So you will need 2. How many 15 minutes make 30 minutes? 2 candles. All right, so you will need 2 here to make it, and the same thing for 30 minutes. All right, the same thing. If you are in the 30 minutes and you want to see the 1 hour, is the same thing. All right, it's the same thing for 4 hours. It's the same thing for daily. All right, if you want to see daily, we need 6. Okay, 6 candles of 4 hours before we can fill the day. All right, it's the same thing for the weekly and the daily. It's the same thing for the monthly and the weekly. All right, now, okay, so guys, just another quick example. All right, all right, now let's look at the monthly. Normally technical traders will like to look at the monthly. In this market too, the market is going down. All right, this is a holistic view of what the 1 minute has cost so far. All right, so now let's backtrack a little bit. All right, let's back up a little bit. All right, so I was telling you that it is like, I was saying that The 1 minute make the 5 minutes, and the 5 minutes we need 5 candles in the we need 3 candles in the 5 minutes to make up the 15 minutes. We need the 15 minutes. If we are watching the 15 minutes, all right, if we are watching the 15 minutes, it will take us 2 candles, 15 minutes, all right. We need to wait for 1 15 minutes and another 15 minutes before we can see 1 candle generated here. All right, 1 candle generated here. So you can imagine if you say that you are trading on a daily. So depending on how your strategy is, all right, before you can see another 1 hour, before you can see another candle here, all right, just 1 candle created, you guys will have to wait for 6 candlesticks. Each one of them is 4 hours. All right, so you have to wait for 1 4-hour candlestick created, another 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 4 hours candlestick created, and the last candlestick created for 4 hours before you can see 1 candle closed in the daily. So imagine if your strategy is based on a daily, how many days you have to wait before you see it come to fruition. So that is why trading is more personal, all right? It will depend on different factors. When you understand this concept that I'm explaining to you, that is where you can come to the point whereby you can decide then which strategy will work for me. Do you understand me? If you don't have more time to stick around the chart because you have other important engagements, then you may want to go to higher time frames, which I've explained to you. If you have more time, then you can play around the smaller time frame where you will see more candles, all right? Because in the 1 minute time frame, all right, in the 1 minute time frame, by the end of the day, guys, think of it. Think of it, guys. You will, every 1 minute, you will see a candle. Every 1 minute, you will see a candle. So by the end of the day, how many candles will you see? Do the maths, all right? Same thing for each one of these, all right? Each 5 minutes, you will see a candle. So by the end of the 24 hours, how many candles will you see? Same thing for 15 minutes. Same thing for 30 minutes. Same thing for 1 hour. All right. So by the end of the day, so if each candle is lasting 1 hour, by the end of the day, how many hours do we have in the day? All right. Do the maths and you will get it. All right. So the same thing for 4 hours. If I have to wait for 4 hours before I see 1 candle in a day, how many candles do I need to see before the day comes to an end? Or how many candles will I see before the day comes to an end? That is what we are facing. And when you get this secret, this is what will help you to understand which strategy in the trading industry fits you well. That is why most traders, when they become rich, they switch from day trading to swing. Why? Because they have other business. They have other passive incomes that needs them involved actively. So they can't be sitting around the chart catching pips. Are you with me? So they will have to change their strategy into a strategy that will before it comes to fruition, it will take days or weeks or months. All right? Good. So, I wanted to give you guys another example. Let's see this market here right quick. Then I will give you the pros and the cons. Then right from the onset, we can see that the market was uptrending. All right. and at a certain point it came down. It started to drop, and it has been dropping ever since. All right. So currently we can say that the market is low. Are you getting me? The market is dropping. All right. We don't know if it will keep on dropping, but the monthly is telling you that for years now, up to now, the market has been dropping. Now you need to remember that each candle you are seeing in the 1 minute, in the monthly, is telling you that in this month, all right, in the month of, currently this is not December, in the month of May, the market is going up. All right. Yes, that's what you're seeing. The market is going up. All right. Now, guys, having said that, if anything is not clear, guys, let me know. All right. Let me know in the comment section, and as I said, I'll be more than glad to help you guys. Now, let's talk about the pros and the cons. All right. Now, everything positive that I would say for the smaller time frame. All right, we'll start with the smaller time frame. Every positive thing that I would say for the smaller time frame is a cons for the bigger time frame, and everything negative that I would say for the smaller time frame is a pro for the bigger time frame. All right. Then at the end, we will look at how good it is for we, the robotic traders. It doesn't make any difference, or it doesn't make any difference. All right. So let's start with the smaller time frame. All right. So the first cons for the smaller time frame, when you are looking at a smaller time frame, or you are trading in the smaller time frame, is that you will never see the bigger picture. All right. When you're trading in the smaller time frame, you will never see the bigger picture. All right. And that is a problem in some cases. All right. Because that will lead me into the second cons, which is the smaller time frame informations that we see are not that much formidable, trusting. All right. It works, but it doesn't last long. All right. So this leads me to another cons, which is when we are trading in the smaller time frame, it is more subject to manipulations. All right, because it fluctuates a lot, because we see a lot of candles, it is subject to manipulations. All right, from the big players trading in the smaller time frame. Another cons of trading in the smaller time frame is because it is too noisy. All right, you will see a whole lot of candles in the smaller time frame. All right, so this will lead me to my other cons that I want to say, which is because you will see a whole lot of candles movement in the smaller time frame, you will have to be in front of your computer, because your setup could come into fruition within some split of minutes, an hour, some few hours. Your strategy can execute itself, right? So if you are trading, let's say in 1 minute, 5 minutes, you are forced, even in 15 minutes, you are forced to stick around the computer. Okay, it's not that you set it and you go and sleep. You don't do that. You do that from the 1 hour upwards. All right, in the bigger time frame. Another cons of trading in the smaller time frames is that because it generates a whole lot of candles, because it gives you a whole lot of informations, you will have to be fast with your executions. All right, if you are not fast, things will happen so fast and you will be carried away by the situation. All right, so you need to be fast in executing your strategy. That is why most of the times it is more advantageous for high frequency traders and high frequency robots, and for those that scalps, all right, because they just get into the market for some seconds and they are out. All right, so it's very, very important. You have to be fast in executing your strategy. All right, one negative thing, all right, I left this out, guys. One negative thing about the bigger time frame is that you cannot see the smaller time frame. You cannot see the informations in the smaller time frame. All right, so you can't always watch the bigger picture to trade. All right, if not, you will be missing some informations. All right, good. Having said that, let's look at some pros of the smaller time frame. Okay, so the pros that comes in my mind in regards to the smaller time frames is that it's two main things. All right, if I leave something out, guys, hit me up in the comment section. All right, you can add it. It could be a lesson to me, it could be a lesson to the people of this community. All right, now the advantage in trading in smaller time frame is that one, you can have your trades executed speedily. You can have your setup coming to fruition speedily. Why? This leads me to the second advantage. All right, because you have a lot of informations, and the informations are the candlesticks, because in the smaller time frame you will see a whole lot of candlesticks. All right, that's why it's vulnerable to manipulations. That is why it is noisy. That is why it has that negative side of it. But on the positive side, if you want to get into the market and come out quick and see your results, you know, within some splits of minutes, seconds, then the smaller time frames are ideal for you. All right, because one, you have access to more information, meaning that the market will move fast in your direction and execute and do whatever thing it has to do. And secondly, it will execute your strategy very fast. All right, now everything that we said for the smaller time frame is the same. I mean, it's not the same thing. It is the contrary for the bigger time frame. All right, so the bigger time frame executions are very slow. All right, the cones. All right, now I'm saying all these things that comes in my mind right now. Right, guys, you may want to put some in the comment section if I miss one. All right, so the executions are slow. All right, these are the cones in the these are the cones in trading in the bigger time frames. All right, the executions are slow. All right, and you have access to less informations. And guys, that is all comes in my mind. All right, but in terms of the positive things, well, I think we got our hands on a lot of things. All right, in terms of the positive things. All right, trading in the bigger time frame, which is everything contrary in the cones of the smaller time frame that I said previously. All right, so some of the pros in trading in the higher time frame also is that it's not subject to manipulations, if I've not said that. All right, and the structures are highly respected. All right, because they are very, very strong, and it is not noisy. All right, so that means because you have a shortage of informations, all right, you get to see a clear cut of where the market could get, and it is likely to react and give you some kind of confirmations which aligns itself with your prediction, all right, based on your strategy. Okay, so that is to say that the information that we get in the higher time frame is trusting. It is more formidable. All right, it is very, very strong than that in the smaller time frame. All right, okay, so the question is, can I make money in all the time frames? Guys, the answer is yes. You can make money in whatever time frame you are trading. Then it will lead us to the next question. Then someone will say, then in which time frame should I trade? Well, that is subjective. That is up to you. All right, you will understand in which time frame to trade based on getting the understanding behind the lesson that I gave you in this video, right? So based on the time that you have at your disposition, all right? You can be a lawyer and a trader, but if you're a lawyer and you have to attend to a client in the morning in the court, you have to go to the court in the morning, you can't be sitting in front of the desk trying to catch pips. No, you can't do that, all right? You got to be in the court. So listen, because you're a lawyer, then that means you will have to ascend in the time frame. All right. If you know you are Mr. Free and you have all the time you want at your disposal, then you can trade in the smaller time frame. But in whatever time frame you trade, guys, you will make money. What does this got to do with? What does the time frames got to do with robotic traders, guys? It has nothing to do with robotic traders, or almost close to none. All right. Why? Because it's not you trading. So what's the problem? Now you want to trade with a robot. Then why do you go and get a robot? You are not the one trading, so allow the robot to trade. All right. So when it comes to time frame factors, it's not a problem for you. All right. You, the owner that you own the robot, it's not a problem for you. But problem is, if your strategy, if your robot is a time frame dependent, then you will have to be attentive, all right? Because let's say if your robot generates a signal at every candlestick, okay, and you put it on the 1 minute time frame, bro, that could drain your money, right? That could kill your account. All right, so you need to understand these things too, because if it is candlestick dependent and you put it on 1 minute, that means after every 1 minute to open a position, every 1 minute to open a position, every 1 minute to open a position. So imagine by the end of the day, how many positions would the robot open for you? And if the market strikes against you, you will pray in all the languages. Listen. So it's very, very important, all right? Sometimes some robots are candlestick dependent, not really a candlestick dependent. They are time frame dependent in the sense that if you don't put the robot on the time frame it was designed for, the robot will literally, guys, frown at you. Like the robot will, man, it will say some horrible words to you in all dialects in the world that you won't like. All right, so please, ladies and gentlemen, understand this. All right, follow the instructions for the robots you purchase in regards to the time frames they work on, and you won't go bad. All right, guys, I go by the names back, and I thank you very much for your precious time that you've spent with me. Guys, if there was anything that I left out, put it in the comment section. It could be a help to me, it could be a help to anyone in this community. And guess what? If there is something that you need me to explain to you personally, I'm more active on Instagram, so you can connect with me over there. Yeah, and I will explain everything to you, and I can help you with whatever query that you have. Guys, having said that, I'm signing out. All right, and I approve everything that I say, and I'm gonna see you.